If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby. All right, welcome back. I am having a new series starting where we're going to actually go through and talk to other fund managers of other asset classes. So we talk a lot about multifamily as an asset class, but as I mentioned early in the podcast history, I want to bring on other types of funds in order to let you educate yourself on the other types of investments that are possible and out there. And so today I'm joined with Anthony Calpas. He is a crypto fund manager, super smart guy. He's a friend of mine. We've talked in the past about his fund and how he's operated it. And today we dive into just crypto and blockchain in general. And he is a wealth of knowledge. His background, he was in French military. He was working on rockets, as you'll hear. He's a rocket scientist. So very interesting guy, very intelligent guy, and he's all in on the crypto space. And he has a very specific strategy that he implements for his fund. But he tells us about how it relates to real estate. We talk about 3 different types of crypto buckets as he sees them. And so it's a high level conversation, but we also talk some nitty gritty and some things. So stick with it. You're going to learn a lot. And so again, this is effort on my end to introduce you to other types of alternative assets that you can invest in. And so without further ado, let's bring Anthony on. I'm really excited to have him on the show. Here we go. All right, Anthony, I'm so glad you could join me today. You and I know each other from some groups that we've been part of, and I wanted to bring you on because I've been talking a lot about alternative assets and how agents and real estate professionals in our market can get into some other cash flow producing or passive investments, taking their active income and putting it into passive income or passive investments. So I've been talking about it for a while. Most of the operators that I bring on are multifamily related. And I'm like, there's so many other investments out there that are possible. Yep. I know some guys that do crypto funds, and you're one of those guys. You and I have had a lot of conversations back and forth about it. So obviously I want to bring you on and just let you kind of tell your story and introduce crypto funds to the audience so that they can actually learn from somebody like yourself. So again, thanks for joining me today. Good to have you on.
Yeah, no, thank you very much, Randall. Thank you for having me. It's a pleasure.
Awesome.
It's not very often that I talk to real estate people about cryptocurrencies and that space, basically.
They need to know, right? And they need to know
Absolutely.
A lot of what's been going on in the market right now. I think it's kind of a good time to bring you on as well to get your perspective on what's going on. So, all right. So just if you can go back and kind of high level your background and kind of how you got into the space and just tell people a little bit about yourself.
Yeah, sure. So, I'll go way back. So I started as in the military, actually. I was a military officer in the French Navy. I'm French, as your audience may guess with the accent. Based in the UK now, but originally French. French Navy. After that, I went on being a rocket scientist. And in the space and defense industry, my area of expertise was software and cryptographic systems, basically. So I was working on satellites, missiles, rockets, aircrafts, both military and civilians, and anything related to software and encryptions. Basically, I had a part in it, basically. Because I'm a computer science guy, I've always been curious in all kinds of technologies. And back in, that was maybe 2014, 15, a friend told me about Bitcoin and it was becoming kind of trendy, among this circle of friends. And I got just curious about it. So I started to read a lot of articles, scientific papers about what's actually called distributed systems, because essentially Bitcoin and cryptocurrencies are based on blockchain, which are a subcategory of software science, basically. So I approached the whole thing from a very intellectual standpoint at first. And I started to invest a bit of my own money in it, to kind of play around. On the side, I had some investments on my own, I was trading stocks. I was doing a little bit of real estate as well, really tiny little bit in France, in south of France. But yeah, mainly stocks at the time. And I basically took a deep dive in investing in Bitcoin and other cryptocurrencies like Ethereum and so on. And I did quite okay. And aside from that, I've always wanted to create my own venture, my own thing, be kind of independent. And don't get me wrong, I loved my job as a rocket scientist. I mean, you get to meet like so many interesting people and you get to work on so many interesting projects. But yeah, I wanted to explore my own path, basically.
Yeah.
So fast forward a few years, I decided to quit my job and start my own fund. And as you can guess, yeah, it's a fund dealing with cryptocurrencies, where I basically leverage all that knowledge accumulated over the years to deliver the best return to my investors, basically.
Fantastic. Yeah, it's not very often you talk to a rocket scientist, and it's very cool to hear you say, "Yeah, I'm a rocket scientist."
Especially in the now financial industry, like most people in the finance industry, they have a financial background.
Yeah,
it's quite weird to have people like shifting from one industry to another.
Yeah. So I had just done a series on funds, and I was talking about how funds are structured compared to syndications, because we talk a lot about real estate funds and syndications and how you pull money together, right? So can you, how does maybe you don't know how they differ from a crypto fund, but can you tell me like how a crypto fund would be structured and just a high level kind of how an investor looking to invest, maybe like how it compares to a real estate type fund, if you know the difference in
Well, you know what, like overall, it's more or less the same thing, right? Like it's your typical LP GP structure, basically. So you have an entity where your investors will just like pour money in, and as a GP, you're basically the designated entity that has control on the LP entity, basically, control over the LP entity. So typical GP LP structure. Most of crypto funds are based in the US, because no matter what people say, the US remains like one of the jurisdictions where it's like the easiest to set up a fund. There is a new, like some people explore new ways of setting up crypto funds, like they want to tokenize, because cryptocurrencies is all about like tokenizations, right? And perhaps we will dive into it later on. But in my mind, I have like three buckets, like the cryptocurrency bucket, the real world asset tokenization bucket, and the blockchain as a technology bucket. These are like three areas, like under the umbrella of the blockchain industry. Anyway, back to funds. Some people are exploring ways of how to use tokenization to deliver a maximum return through their own cryptocurrencies that they issue, basically. So the way it works is you create a token on some blockchain, can be Ethereum, can be BSC, can be Avalanche blockchain, and you would raise money through tokenization, and this money you will deploy it in other cryptocurrencies or in other startups, and you will deliver the returns that you generate through the tokens themselves and not fiat money like US dollars, basically. So it's a bit different from, that particular form is a bit like original and different from, the typical LPGP structure. It's still quite marginal as we speak today. Maybe it will become more widespread in the future, but we are not there yet.
So if you're doing it in that way, and I mean, we could talk about Sam Bankman-Fried and that whole debacle, what happened, but do you feel as though, and maybe it's already changed and I just haven't kept up with it, the SEC is now getting involved and considering all of those to be under their domain? They're actually selling securities rather than just tokens, because I know that was kind of a workaround. What's the latest? You tell me.
Yeah. So basically, to put it very simply, everything will be considered, eventually, this is my belief, everything will be considered a security except for Bitcoin. The reason why is that is because Bitcoin is the one thing out of everything in the crypto industry that is truly decentralized. Like when you take like even Ethereum for that matter, or other networks like Polkadot or others, like the vast majority of the power of the network is concentrated in one entity, in one foundation, like the Ethereum Foundation, for instance. They will control the vast majority of the validators. Therefore, they do have control over the governance of the entire network. And in a sense, it's almost like a truly private company, developing their own product and competing with other competitors. But at the end of the day, they are the ones making profit out of it, basically. And it's still in debate with the SEC, and there are some companies in the US, but also globally, that are trying to have some kind of lobbying activity to make sure that things like Ethereum and others are not labeled securities. But I don't believe that it will work. The easiest way for almost everybody, I would say, even for retailers, when you think about it, because people tell you, like labeling these things a security would exclude a lot of people from participating in blockchain, cryptocurrencies, and financial market. Eventually, I kind of disagree with that statement. Because yes, it's true that when the SEC comes in and things are made securities, you have a lot of things to comply with. So therefore, you have regulatory requirements. You cannot onboard any kind of investors. People need to be qualified investors or like a certain type of investors, especially in the US. But like when you make things a security, and because things are automated through the blockchain, all those compliance and regulatory requirements will be much easier to deliver. Therefore, it will bring the cost down. Therefore, eventually, I'm not saying it will happen overnight, but eventually it will be possible to onboard non-qualified investors in issuance of securities, basically, over the long term. So I do believe that securitizing the whole thing is the best, probably the best play to do.
Yeah, I mean, I go back to like I dug into for listeners out there. Look, there are a bunch of different regulations that the SEC makes you fall under that you can get some sort of exemptions for full reporting, like a publicly traded company. So you can have these private offerings called PPMs, private placement memorandums, that go out, and that's kind of what we're talking about right here. Having a private offering that is semi-public. There's a 506C, 506B. So, to your point, though, you're just talking about having some kind of regulation with people who are not accredited investors, perhaps. I was looking at Reg A filings and talking about it quite a bit in that group that we were in about, that seems to be the place to go. And so I don't know if you've looked at that, but Reg A is like a crowdfunding regulation to where you can raise capital. I think it's up to 10% of their net worth or something that you can,
correct.
That people can invest.
Correct, yeah.
And so you don't have to be accredited to do that. Seems like that might be maybe a solution.
Yes, the one drawback about Reg A though is that my understanding is that it's capped, and the cap is quite low. It's quite low. I believe it's is it like $70 million or something like that? I'm not sure. I will need to check. But anyway, it's one of the main critiques against Reg A. But yeah, point being, to your point, basically, there are ways to be compliant with regulation and to issue a security and still be able to onboard non-qualified, non-accredited investors, basically.
Yeah. I think that the Reg A, when it first came out, it was capped at 5 million. So it was really small offerings. And then they came out with Reg A plus, and it was quite a bit more. I don't know, up to 75 million or something like that. 75
million, yeah, correct.
From memory. Right. Yeah. But anyway, so just to that point. So, all right, a lot there to unpack because, crypto in general. So I guess, how do you make money in crypto? It's like, all right, there's a lot going on there. There's 3 tranches that you see, 3, buckets that you place crypto into. And so like as a fund manager and as an investor in the space, like where are you trying to play and what's your investment thesis, I guess? How are you going to try to make some money, if you can talk about that? Right?
Yeah, let's get into it. So, so the 3 buckets I mentioned earlier, obviously like these are like vast buckets and there is only so much I can do in basically, and I don't have the kind of bandwidth or team to address every single sector and niche I'd like to address. So at the moment, I focus on validators. So validators are for proof of stake kind of blockchain network, as opposed to proof of work. So basically, Bitcoin is proof of work. So it means that it requires a lot of energy to do a lot of computation, to process a lot of like calculations, to let's say to keep the network safe and secured and running and up and running basically. So that is proof of work, and my focus is proof of stake. So there is no, it's a much less demanding in terms of energy consumption. But what you need to do is to basically have a lot of like skills, like computer skills, to set up your own validators, because it's like basically like you cannot wake up one morning and decide, hey, I'm going to set up a validator. You need to have, like servers and a few knowledge in computer science. And number 2, you need to have a bit of capital to lock up a certain amount of token in each validator. So if we take the example of the Ethereum blockchain, for instance, so for the Ethereum blockchain to work, you need like a bunch of nodes and validators to process the transactions. And as a validator, you will need like 32 Ethereum tokens locked up into your validator for your validator to generate a return on that, like based on your 32 tokens locked in, basically. And for Ethereum in particular, the reward varies because obviously those validators, they are incentivized by earning Ethereum tokens, basically. Otherwise, they wouldn't do it for free. I mean, no one works for free, right? So this is essentially what we do with my fund. We validate network transactions on different proof of stake networks. So we're on Ethereum, we're on Avalanche, on Polkadot, on Cardano, on like those big layer ones, basically. Yep. And like the return varies based on the network. So when you take Ethereum, for instance, on average, it's in general like 7-8% per year in Ethereum tokens. But theoretically, it could go all the way to 19.8% per year. And that depends on a lot of different parameters, basically. The number of transactions, like the number of validators that are up and running globally, the quality of your validation, like there are a lot of parameters that come into play. But on average, you can expect like 7% something on return in Ethereum tokens. And then you need to add on top of that the token price appreciation, because the value of one Ethereum token fluctuates, as you know, on the crypto markets. So this is what we are focusing on at the moment. And I mean, there are many other sectors and subsectors that we could address, but it's a bit early, and we need a bigger team for that for the moment. Yeah. And that's part of the first bucket I mentioned, which is a bucket of cryptocurrencies, basically.
Yeah. So okay, so it fluctuates based on since you're getting paid in that token, then correct, or in that coin, sorry, then or on that network's coin, then you're getting paid a fluctuating amount. So you're hoping that obviously crypto goes up or that Ethereum goes up in price.
Basically, what is guaranteed is basically a minimum return in a native token. So let's say on Ethereum, it can go low. It cannot go lower than 4.8% per year. So the guarantee is that the validator will make 4% per year, 4.8% per year in Ethereum tokens. Now, the price of Ethereum can crash. It can lose, I don't know, like 60%. I mean, everything is possible on the crypto market, right?
Yeah.
And the belief, like thesis, is that cryptocurrencies as a whole, layer ones in particular, because we are focusing on layer ones like Ethereum, Cardano, Polkadot, and so on, they will be, they will see a massive adoption because the innovation in the overall crypto industry is yet to be seen. Yes, there have been quite a few DeFi protocols or NFTs and so on, but we are yet to see the equivalent of Amazon, Google, like all those big successes within the blockchain industry are yet to be seen. And when they will happen, when those big companies or projects or protocols will be built, they will be built on top of layer one protocols. Because I mean, there is a reason why they are called layer ones, is because they are the first layer on top of which anything else like decentralized is being built on. So yeah, we kind of bet on, okay, number one, validators, they make a minimum return in the native token in the native token. Number two, that blockchain attached to that token should do well in time because it will be massively adopted because more applications will be built on top of that blockchain and more people will use it. Basically, this is the overall thesis.
Yeah. It's like you're almost like a capital allocator with a work product at the same time. So as you're talking about, I'm trying to think, like, are you on the picks and shovels side of it where you're providing, like, this is going to happen, you guys need this no matter what? Is there ever a scenario that you see where validators are not needed? Does that phase out with some sort of new tech that comes into the space, or is that?
I mean, what can happen is another type of mechanism, but no matter what, you will still need the validation process. So instead of using proof of stake or proof of work, it can be another kind of consensus mechanism. It can be proof of history, can be proof of memory, can be proof of authority, proof of transactions. But no matter what, the activity of validating transactions is like consubstantial to how blockchains in general function. Yeah. So there is no way around it, basically. And if the consensus mechanism evolves in time, we'll just adapt and still be involved in validating transactions, basically.
Yeah. So you could just pivot into that new thing. So we're proud to be sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline's currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other Texas secondary markets. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com. So with, I guess, risk mitigation and this type of thing. So one, I want to talk about that, but I also want to get back to, before I forget, there's in a fund and set up in your structure, I'm kind of curious of like the return horizon that investors would look at. So I want to touch on that. And I also want to touch on, maybe
the two other buckets, maybe like because I mentioned one, cryptocurrencies, but also real world asset tokenization and real estate. There are some applications for real estate, and also blockchain as technology. So so to your first point, return kind of thing, it really depends. So it kind of depends on your how long you stay exposed to crypto markets. Like crypto markets are like super volatile. And if you stay a very short amount of time, you're more likely to get burnt than making a gain. So my advice to your audience will be, no matter how you look at it, try to stay for the long term, basically, because over the long term, it kind of like smooth out like all the fluctuations and ups and downs and stuff like that. Overall, so here's the thing. There is a very serious study. I don't remember if it was PitchBook or maybe JP Morgan, one of the other. They've made a survey that demonstrates that the overall growth of the blockchain industry over the next years until 2030 will be 45% per year. It's huge. So when you compound all of this between now and 2030, it will be more than 1,000x. More than 1,000% of return. So obviously, some things will fail, some things will do more than 45% per year. So in average, it's 45. So we are betting on the fact that we can do on average 45% per year over the next few years. And our investing period, time horizon basically is 5 years. So which kind of like smooth all fluctuations or bear markets for that matter.
A lot of stuff in there. I like how many questions I have for you because it's like fascinating, but immediately on the return. So it's a 5-year time horizon that you're targeting, plus or minus a year or two, depending on how the fund goes. I'm sure you could return some capital if you guys are crushing it.
Correct.
So what does it look like throughout though? Like, is it an invest and I'm waiting to get any kind of return until the end, like a VC fund, or is there cash flow along the way? Like, how does that look?
Yeah, so that particular fund we set up, it's like at the end, like there is no cash flow in between. But back to the, you mentioned VC funds. There are some VC funds that do allow within the blockchain space that do allow for the investors to see some money before the end of the term. And the way they do that is basically they have some kind of agreement, like share revenue agreement, with the portfolio companies, where basically they help the company to grow by strategic network introductions or like bringing like multi-million-dollar contracts. And basically the company will share the revenues generated with the fund managers, basically, which in turn will redistribute those revenues to his investors. So everything is possible, basically. It really depends on how the fund is structured and what the fund is looking at, basically.
Okay, got it. So that was one question. And then back to, I guess, in your setup and the structure, how one is, it's like risk mitigation strategy. Like, how are you looking at that? Because if you're almost have to pick the layer one, that's kind of your bet. It's like layer one is going to continue, but then you have to pick botch it, but you have to pick either Ethereum or what are those called? You have to pick one of the layer
tokens. One, basically, among all the layer ones, right?
Yeah. So how do you look at that? How do you decide which one to go after and know that they're going to have a lot of transaction volume on their platform?
Yeah, no, good question. So this is precisely where my expertise comes into. So as I said in the introduction, I was basically rocket scientist looking specifically at software and embedded software and cryptographic systems. So what I do now, I no longer look at space systems, but I look at blockchain systems, and I just dive into the code. Like, I look at the architecture, how it is programmed, like what is their roadmap in terms of technical development? Is it realistic? Do they have what it takes to achieve their goals? Like, do they have the right team in place? Do they have the skills? Like all those parameters come into play to see, okay, does that particular blockchain, whether it's Ethereum or Avalanche or whatever, does it have what it takes to do well in time? Basically, it stands the test of time. And there are quite a few layer ones, right? Like there are tens and tens and tens of layer ones, like layer one projects basically, and only a few of them, I believe, will do well in time. So I've identified like 13 to 15 layer one projects to allocate capital to. And we basically, back to your question about risk mitigation, we kind of diversify across 13 to 15 different layer ones. So, and we do believe that, and I could almost like mathematically prove it to you almost, layer ones that we invest in have what it takes, like technologically speaking, to scale and to be massively adopted for sure.
Yeah, that's interesting. That's kind of what I mean by it's almost like VC, like you're doing the deep dive on these platforms and saying, okay, I'm going to pick some winners, make some bets, but again, you're not. How much capital do you have to actually allocate to become? Yeah, you just have to buy 32 tokens on Ethereum, essentially, right? So like that's the barrier to entry. Sorry, go ahead.
Yeah, so it really depends on what protocol you're talking about, because each network will have its own set of requirements. So on Ethereum, it's 32 tokens, but from a fund's perspective, because you have like so many like costs, like you need to pay legals and accounting and stuff like that, it doesn't make sense to have only one validator on Ethereum. I mean, you might as well do that like on your own, like without a fund, basically. Yeah. On Avalanche, you need to have like 2,000 AVAX tokens, and depending on the price, can be quite like pricey. On Polkadot, like if you don't have like $2 million at least, like you can forget about having a validator on Polkadot. Like so, they all have their own set of requirements, and you need to factor that in to keep a level of diversification you're happy with, because again, like you want to reduce your risk profile, but also you want to maximize the kind of profit you can make, because they all have like different like return profiles. Polkadot, for instance, will return like 13% per year in Polkadot tokens. Ethereum will return like on average 6-7% per year, but then you need to take into account, price fluctuation of Ethereum and Polkadot. So how do you allocate it in your portfolio and so on? So it's a lot of like mathematics and balancing and equations like going on, thrown in the mix to have the right portfolio allocation, like with the right percentage that makes sense for both like risk profile, but also return profile and diversification profile. Yeah, depends. But
what are you most excited about? Like what
like what area?
I guess, yeah. Like what protocol are you most excited about? What kind of thing are you? And we'll talk about the other two buckets in a second, but and how it ties into real estate. But just kind of curious, because I'm going to throw some dollar cost averaging into something real.
Yeah, no problem. Yeah. So I would say, if you want to, so let's jump into DCA now, the dollar cost averaging. Just like keep it simple, like do it on Ethereum, because I do believe that even though Ethereum is already like super big and super massive, it has this advantage of, number one, the first mover advantage, because it was the first layer ones, the first of all the layer ones. They have a very like active community, like the vast majority of the protocols that are being developed are developed on Ethereum. They have that, they have that momentum basically that will not die away anytime soon. And I do believe that it's probably not the protocols that will have the biggest upside, because they are already quite massive compared to other layer ones. But in terms of certainty, I mean, they are on top of the game for sure. So I would say, Ethereum is like, if you don't want to be scratching your head for too long, okay, what is the best protocol and analyzing stuff, just go to Ethereum and you'll be fine. Fine.
Yeah. Or just invest in your fund.
Or invest in my fund, for sure.
It's like even less.
That is the second most simplest.
That's right. It's like buying S&P as Ethereum type of equation. It's kind of the go-to. Yeah. Okay. So then let's talk a little bit about, so you've got, again, I'm looking at it, and I always look at these types of things. It's new, and who is providing these services, and who is actually trying to make who's got the gold mine they're trying to mine, and who's actually selling the picks and axes and shovels and that sort of thing to those guys. And like, I like this business down here or the picks and axes, because you have a lot of customers, right? And so what you're in that bucket is how I would look at it. And then what are the other two that you talked about, and what are some, I guess, like projects that are being built on, and how does it tie back to real estate?
So the two buckets, although they are tied to the first one, I mean, they're all tied together, but like the two buckets are quite different. So first bucket, as a reminder, it's what I call like cryptocurrencies in general. So you will find Bitcoin, Ethereum, DeFi projects, NFTs, some metaverse stuff in it as well. So it's like, it's token-based basically, but cryptocurrencies focus. Second bucket is what I call, and what other people call as well, real-world asset tokenization. So the whole point is to basically fractionalize the ownership of real-world assets. So it can be real estate, can be mortgage, can be debt, can be gold mines, can be anything, equity, private equity, like anything really. And the point in tokenizing, I don't know, a real estate portfolio, for instance, or a debt fund or whatever, is to bring liquidity in the market. Like, let's consider the building I'm living in right now. So it's like it's a 10-story building. I don't know how many, probably hundreds of, maybe tens of millions of dollars to acquire it. You cannot sell it like that, right? If you fractionalize it, if you tokenize it, you're now able to sell, I don't know, 30% of your tokens, and people could just buy them and trade them and use them as a collateral to borrow more money and to buy other fractionalized assets. So basically, it's applying the blockchain technology to securitize, to make securities, to digital securities out of really anything. Art, real estate, you name it, basically. So this is the second bucket. And on that bucket, it's a game that mainly institutions are playing right now. JP Morgan, Citi, HSBC, like all of them, like they are exploring those capacities, because it will help them to reduce drastically payroll, because when you complete a trade, especially for stocks, for instance, you need to, you have a lot of reporting to do. You before settling the trade, there are a lot of steps to go through, basically. And when you automate this process with a blockchain, with smart contract and so on, you remove all the middlemen in between, which will be very cost saving for all those financial institutions. So these are the guys that are mainly playing into that field. Some small startups are trying to get into it. There is one that I can mention. It's called R3, the letter R and the figure 3. Yeah. So they are a blockchain. So basically, they are a blockchain development company. So they are developing private blockchains, and they work particularly with those financial institutions and banks to help them design and come up with technical solutions to tokenize all kinds of assets. There are a few other companies like Hyperledger. So it's like they are based on Ethereum, but it's essentially like the private version of Ethereum, so to speak. And they leverage it to tokenize all kinds of stuff. And people like you or your audience could reach out to them and say, hey, I have a portfolio of, 100 of properties to tokenize, and they can do that for you, for instance.
What was the name of that last one? Not R3, but the other one after that? Hyperledger. Hyperledger? What?
Yeah, Hyperledger. So
Hyperledger. Okay.
PER ledger as a ledger, basically.
Okay, I'm going to link it in the show notes. So I just want to make sure we have it right.
Yeah, no problem. And so these two that I've just mentioned, R3, Hyperledger, they are more on the technical side. You will also find startups that are also on the, how to put it, let's say financial side, that will help you to onboard your tokens on some sort of primary or secondary market. So I can mention T0 is one of them, very big in the US, Securitize.io as well. Those two ones are the two biggest players in the US. In Europe, you will find DigiShares, you will find Tokeny, you will find, there is one I think of, but I forgot the name. My memory is kind of blanking right now. But anyway, they are basically, their core business is to not only create the tokens on the blockchain and so on, but also onboard those tokens on their own primary and secondary market. Because, I was just about to say that R3 and so on, they can create the tokens, but like making those tokens tradable is a whole other story. And this is the main pain point as we speak today of that bucket of real world asset tokenization. It's kind of easy to tokenize stuff. It's kind of easy to create a token. It's a lot less easier to have this token on a secondary market being liquid, having a lot of investors or clients willing to trade in and out of that tokens. So that is the second bucket really. And the third bucket, I mean, this is like my way of like seeing the markets, right? Like this whole industry. So it's like the third bucket, I would say it's more of how to put it, like a play to integrate blockchain as a technology into traditional sectors. And in my opinion, like the upside is just like there is no limit to the upside, because like the only limit is basically your imagination. And allow me to illustrate with one or two examples. Basically, there is one company. They have nothing to do with blockchain at all. They have nothing to do with cryptocurrencies, nothing to do with finance. What they do is developing medical devices, and in particular, they've been developing some kind of hardware device so that people like you and I at home, they can diagnose if they have COVID or flu. So it's a piece of hardware, you swab inside your mouth, and the hardware can tell you what kind of variant of COVID has infected you. And through your Wi-Fi, if you give if you agree to it, you can share your data with this company on their cloud platform, and it means that they are able to monitor in real time the evolution of a pandemic on a global level. So they can say in London in the past 24 hours, we had like plus, 40% of COVID cases. And within those plus 40%, 10% of them was people between 18 and 25 years old. 12% was between whatever and whatever, like they can be very accurate. Point being, up until now, they've been making money out of selling those devices, and they wanted to make more money by monetizing the data that they have been gathering so far. And so they wanted to sell this data to health governmental authorities, pharmaceutical laboratories, hospitals, GPs, like all those stakeholders in the healthcare system. And the main blocking point that this startup was facing is, hey, what is actually the proof that you have 1 million data points? What is the proof that those data has not been faked? And they were struggling for a while. They were trying to convince these health organizations that they were like a very honest actors, and they would not tamper their data. And at some point they got tired of it, and they decided to develop their own private blockchain. So there is no token involved. There is it's not a cryptocurrency. There will not be it will not possible to buy any kind of token based on their blockchain. The whole point of their blockchain will be to share in a transparent way data with all those entities, which now have the guarantee that the data has not been tampered, because by design, a blockchain is immutable. You cannot modify what has been put on the blockchain. It's not possible. And this is one of the few examples, like one of the many examples where blockchain as a technology with no tokens attached. So this is why I put it in another bucket than cryptocurrencies as we know them today. This is how blockchain can be applied and integrate into so many different sectors. And I've been scouting various sectors, and I've been seeing quite a few very interesting innovations in sectors you wouldn't think of, like 3D manufacturing, supply chain. Of course, it's one of the obvious sectors for blockchain, but also arts, auction, real estate, 3D manufacturing. I said it already, but also AI, sports, entertainment. It's social networks as well. And yeah, I'm telling you, there are quite a few startups. They are still very early stage as we speak, but they are working on leveraging basically blockchain technology without any tokens attached, but leveraging blockchain technology to create new products, new services, and integrate them into their own sector to disrupt it basically, and to gain some very sizable competitive advantage.
Yeah, I was going to ask you. You got to it, but I was going to say why are they tokenizing that, or why are they turning that into their own blockchain? And it's really just to prove to the health organizations. Yeah, that makes sense. But how can somebody how can the blockchain help them? It's not just one individual who took 5 different tests, right? And that data is up. Is there something that uniquely identifies their saliva compared to Joe down the street?
Yeah, so basically this piece of device, like this little device, it's essentially a piece of hardware. So there is some kind of embedded software on it, like on the hardware. It's checking that you're not cheating it. So it's checking that you've actually put the thing inside your mouth, that you're the right person, that it has already gathered some kind of data about you. And when you do use it and you do share your data with the blockchain, the role of the blockchain itself is to present this kind of timestamp guarantee that whatever you've uploaded on the blockchain at today 5 p.m. It's the true data, and it will stay there, and that's it. And it has been collected in your location by your device, and it has not been tampered. And only blockchain could guarantee that, because by design, blockchain cannot be tampered. Like if you consider the internet as we know it today, like that company could provide the same service with their own servers and give access to their servers to hospitals and health governmental authorities and so on. But internally, this company could like kind of tamper their own servers. Basically, they could tamper the data that are onboarded on their own computers. But with the blockchain, you cannot do that. Only blockchain can achieve that, basically.
Got it. Yeah, I see. Man, have you heard of any startups trying to tackle like voting? It seems to me like that is a direct translation to being able to vote from the house and increase absolutely. The number of the turnout for voting anyway, and actually keep track of it. That'd be interesting. So I want to get back to the real estate side, because you mentioned something, one that is super interesting, how you can have the real world application and then integrating it into those existing businesses. So on the real estate side, my first question was how once you tokenize something, and I know they've done this with a number of assets, right? It's so I've seen it. I've seen the news. I've read about it. One, I'm wondering, how is that not a security, right? That's one question. Two, it's how do you appraise that property, right? Once you've tokenized the entire thing, and over time the value of that property increases, are you getting an appraisal on it when you're trying to go and sell 30% of your shares in that deal?
So it is very much a security. So your first point, it is a security. So there's no way around it. Okay. So it's essentially a digital security. Yeah. Some people call it a token, but yeah, it's a digital security. Number two, the value. So good question. So there is what's called the primary market. Primary market is this place where tokens or securities or bonds or any kind of financial product is issued in the first place. This is called primary market. So when you want to tokenize your, let's say, real estate portfolio, you would have like a certified appraiser, real estate appraiser, giving you some kind of a certified evaluation or assessment of your portfolio, proving that your portfolio is actually worth, I don't know, let's say $100 million. And this is going to be the value of what you tokenize. So whatever the number of tokens that you emit on the primary market, it's going to be worth a total of $100 million, basically. And then, so this is primary market, right? And then on the secondary market, this is the place where it's made available for people to trade. So for almost anybody to trade for that matter. And this is where the speculation comes in. So people may think that your portfolio will accrue value in time, or maybe they think that there will be in the next 6 months some kind of real estate crisis, and now is not the time to buy, and therefore no one will buy your tokens, and the value will go down. So this is where the price fluctuations happens. Now, like the real world value of your portfolio comes into play again in the life cycle of the tokens on that secondary market. The day you want to withdraw your tokens from secondary market and take it back to primary market. So this is when you would have another certified appraiser telling them, okay, given all the market conditions and improvement brought to your properties and so on, your portfolio is now worth, I don't know, $125 million. And that will be the price you will pay to whoever owns the tokens on the secondary market. That will be the price you will pay them to withdraw the tokens. But that cannot happen at a blink of an eye. Very often it is some kind of regulatory like order that has been given. So a very a recent example is all those sanctions that the West has taken against Russia, against Russian investors. So basically like there is no Russian who is able to hold any kind of European or US securities, right? So those banks and funds and so on had to be able to withdraw the securities from those from those Russian investors. Sorry. So in that kind of situation, your tokenized fund should be able to withdraw whatever tokens that you've sold to that kind of investors to be compliant, to stay compliant with the jurisdiction of your local jurisdiction, basically. So point being, primary market value is defined by certified people, professionals, and so on. On secondary market, this is where the speculation is happening. And in case you have to withdraw from secondary market, the price on the primary market is the one that kind of supersedes, that overtakes the one from the secondary market, basically. But all of what I've just explained is like meant to be very much explained and detailed in the document, like the legal documents, because basically, essentially, it's an offering. It's a financial offering, right?
Yeah.
Like you need a private placement memorandum, you need an LPA, you need the same kind of documents you would have when you set up a fund. So it is a security, and you still need to go through all the regulatory and legal process to set it up, basically.
Okay, I think where I got maybe confused then is I look at it as, okay, I'm going to tokenize this thing, and now it's liquid, and so maybe it's worth $100 million in the scenario you gave. It's worth $100 million. We tokenize the thing, and so on the secondary markets, in my mind, people are just trading tokens, right? They're like, maybe there are 100,000 people that came in on that $1 million. They all have small stake in it, and they all have their tokens. They can just trade them however much they want.
Correct.
So,
yes.
Okay. So that's accurate. Okay.
Yeah.
And so then, And so then as the maybe major shareholder or token holder, if I had 50% left, and I wanted to sell all of those, like I'd have to take it back to the primary. Is that what you're saying?
Sorry, say again?
If I was the main, if I still had 50% of the tokens and I wanted to just get rid of the property, I'm like, okay, I'm ready to sell. I don't want to own any of this property any longer, or this portfolio. Then, and say it's 150 million, just for easy numbers. So at $75 million value, essentially, how would I get my money? I would have to sell it individually to all these individuals and just make those available on the secondary market, or I could take it back and just sell it off on the primary.
Yeah.
We're getting into the weeds here, but I'm just kind of curious.
No, 100%. So there are several ways to go about it. You could either decide to kind of dump your tokens on the secondary market, like hoping for investors on secondary market to buy whatever you're selling, or you could sell your all like $75 million in tokens to another fund or to another entity that is interested in having half the ownership of half of the property. So, or you could take it back to primary market first, and then, so basically when you take things back into primary market, essentially it means that you withdraw the assets from the market, basically, because in primary market only a handful of people can access the primary market, so institutions and that kind of stuff.
Got it. Yeah. Okay. Yeah, that's interesting. Like so much going on. So tell me. Again, you have set up. We're getting kind of to the end here. I want to talk about your fund though, and kind of see like what's your what are you like aiming for? Kind of like what's the next step? Obviously, there's a lot of stuff going on in the market right now. As we were talking this past weekend, we had this banking debacle. We had Sam Bankman-Fried. So like what is happening in the crypto market now? Last year, 60,000 was kind of where we were. Was that a year and a half ago, maybe? And now it's about $20,000. So just again, high level, like what are you looking forward to, I guess, for this year? And like what exactly are you looking forward to in your fund, right? Like, so you're setting up a fund, or you already have it going? So you can talk to that just a little bit if you want.
Yeah, absolutely. So let me answer your point like bucket by bucket.
Sure.
So let me start with the last one. So the one where like blockchain as technology is being like exponentially integrated into traditional sectors, I would say, like healthcare, 3D manufacturing, and so on. So I do believe that this is probably the least mature bucket, let's say. So this is because people are like starting to realize only now that blockchain is much more than only cryptocurrencies. So people are basically starting to use their imagination only now to kind of create new things and apply it to other sectors. So I do believe that in terms of upside, this is probably where the main upside will happen. This is in that sector. So as far as I am concerned, my project is to set up another fund soon for that, to address that particular bucket for sure. Like I don't want to miss out on that, because I mean there is too much to gain in that. Second bucket, a tokenization of real world assets. So can be real estate, can be mortgage, can be debt, can be gold, art, you name it. I do believe that the future is very bright. However, it's a game where mainly institutions are playing. So unless you are already like several hundreds of millions of dollars kind of entity, it's hard to play that game. Although I wish I could get into it, but it's not there. We are not there yet, so we'll be a bit more patient. But definitely, the world. I do believe that the financial markets as a whole will be eventually tokenized. They will be tokenized. It just makes sense because, as I said, financial markets as we know them today. So stocks, bonds, and so on. They are super expensive and they are highly inefficient because you need a lot of people like to cross-check that the whole trade has been completed, settled, the cash was there, and the right issuance has been done, and compliance and so on. Like the whole thing can be automated with smart contracts. So eventually, I don't know how soon, but I will bet. I've heard rumors because I'm attending some events and I'm in some circles and so on. 2025, 2026 is a year where we will start seeing like those tokenized funds like going kind of mainstream, and then it will just be a matter of spreading it to the rest of the financial markets. And now first bucket. So yeah, as you said, Bitcoin was at like 60,000+ a few months, like a year ago. Now it's around 20 something. Where are we going? Like, what is the future like? So as I said, I do believe that no matter what happens, the category of cryptocurrencies that will benefit the most are layer ones cryptocurrencies, because they are the protocols that are needed to build anything else. If you want to build an NFT, you need something like Ethereum, which is a layer one, or equivalent. You can build an NFT on Avalanche, on Polkadot, on this kind of stuff, but you need a layer one. If you want to build some kind of lending protocol, like decentralized finance protocol, you need a layer one. If you want to play with the metaverse to do some kind of gaming activity, you need a layer one. So no matter what happens in the future, the layer ones category will be the category of cryptocurrencies benefiting the most from the upside. And aside from that, I do want to say that Bitcoin overall is probably the safest play. So for people who do not want to spend too much time on analyzing, categories, potential risk, upside, DCA, not DCA, blah, 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 just go with Bitcoin at the end of the day. Because especially now that, at the beginning of this year, was it January or February, the CFTC has stepped up to categorize Bitcoin as a commodity. So it's no longer like a security. So you can finally breathe, what a relief, right? Like it's no longer like there is no threat of Bitcoin being a security any longer. So it's quite huge. So I do believe that Bitcoin, I'm not saying that it will replace gold, like gold will always be gold, but I do believe that it will play some kind of similar role. So it will be some kind of digital gold. I cannot tell you right now how much Bitcoin will be in 2 years, 3 years, 10 years from now, but for sure it will be very, very valuable, much higher than 60,000. This is my personal belief. But because again, like everybody will see the potential of Bitcoin as some kind of digital gold, much more easily accessible than physical gold itself. Great upsides in all those three buckets for sure.
Yeah. All right. I want to bring it back to, what listeners can do. Again, we've got a lot of real estate people that listen to the show, different, either agents, attorneys, and, title companies, that sort of thing. So like what in real estate, what is there a way to invest passively right now and get a return? What would be your like low hanging fruit?
Well, I would say aside from going, kind of blindly for Bitcoin or Ethereum, like kind of just doing a dollar cost average on it, the easier solution is to talk to a fund for that matter, because no matter how you look at it, like, I mean, the same thing is real estate, right? It's as if I was asking you, like, what is the low hanging fruit in real estate? Well, you need to look into details, because the US is a big market, and like each state has its own dynamic, and within one given state, you need to look at things in one city, and you need to go further, like to zoom into a specific neighborhood and so on. The same happens with cryptocurrencies and blockchain in general. It's hard to give like some kind of easy turnkey solutions that anyone can apply that will fit anyone's need. So I would say that, like, okay, if you want to maximize your return and sleep well at night, talk to a fund manager, talk to someone who is actually, managing a crypto fund for that matter. And if you don't want to do that, and if you don't mind, doing some kind of dollar cost average, just do it in Bitcoin and Ethereum. These are probably the two safest and play with the biggest upside. Even though I do believe that the biggest upside will require to get into like the venture capital type of side of things, with those startups integrating blockchain, as I said, into traditional sectors. Because the potential is just like it's unheard of. Basically, it's super huge, but it requires a lot of work. It requires a lot of due diligence, and unless you're a professional, unless you do that like day in day out, it's a lot of headache. So
let me ask you this then, because I still look at it as either you could be a capital allocator and you're taking a fund like kind of a VC would, and you're betting on some companies who are already doing that, or you are trying to go and do that yourself and you raise a fund. So like, again, in real estate, you could be a capital allocator into someone else's deal. Like I could raise capital and put it into their deal as an LP, and then my fund is just a large investor in these deals. Or the other. So what side are you most interested in? Are you, if you have a fund up and running and you're going in that third tranche, that third bucket, are you trying to create the companies, or are you trying to bet on the companies who are already creating the
so essentially, we invest in companies that are creating products, services, and so on. But we don't like how to put it. It's more than just sprinkling a few money like across a few companies. It's like also helping them grow, like strategic partnerships, like network introductions, also like code reviews, like, on the technical level and so on. So it's like basically betting on already existing companies. I mean, early young companies that are developing innovative products, but then walking the journey with them to help them scale and grow, basically.
Yeah, for sure. Awesome. That is very cool. Very cool space to be in. So, all right. I want to wrap it up. Just some questions not related to work. So, yeah, what's your favorite pastime not related to business? Let's get to know Anthony a little bit better. Aside from shooting rockets, like what else?
Yeah, I mean, that's a good question actually, because I like playing poker. So one thing I do like is watching YouTube videos of tournaments, poker tournaments, like the World Series in Las Vegas and stuff like that. I do play poker with friends as well. Sorry,
I was gonna say, do you have a favorite player? You got anybody you watch?
So I mean, I'm French and I'm like super patriotic, right? So I've been in the army, blah blah blah. So the one I support the most is David Kitai. He's a French poker player. He won a few bracelets. He's a guy, and I like his vibe. He's super like chill. I mean, he's really cool. He's really cool.
Yeah. I see Negrano on there a lot, and then I see the Helmuth, like the spat they always have. It's funny to watch them like go back and forth. So it's very entertaining. Yeah, absolutely. Aside from that, I like just like walking. Basically, like walking helps me like clearing my head basically, and running a little bit as well. Other than that, time with family. Like aside from being a rocket scientist and like all these like fancy stuff, I'm a very simple guy. I just do simple stuff. Nice. Well, to that point, like, what's the best thing or memory that's happened to you or your family in the last like 60 days or so?
Well, I guess, okay, so I'm engaged right now. I'm about to get married this year. We recently chose the venue because it was because we are quite international. My future wife is half Israeli, half Nigerian. Yeah. Myself, I'm French, and I have like friends like scattered from all over the world. So it was a headache to choose the right venue, like, because we wanted to accommodate kind of everyone. Yeah. We found one recently, and it was a bit of a relief.
Oh yeah, for sure. Congrats. That's awesome.
Thank you.
Yeah, that's should be a good event then if you got people coming in from all over the place. Let's see. And then name one or two people who've been most influential to the way you think or your success.
Yeah, that is a tough one because there are quite a few of them. And the one, I mean, so like, the usual ones, like, Warren Buffett, like Elon Musk, of course, like all those like prominent guys, like celebrities, but like geniuses, like there is only one Warren Buffett in the history of humankind. Like there is only one Elon Musk in the history of humankind, So aside from those guys, I would say people that have been very close to, but like former mentors, my former head of division when I was in the army, like they were like very like charismatic people, and like no one knows them, like they're not celebrities, like apart their families and their friends and their close, because no one knows them. But they are the kind of people that inspired me by their simplicity, so to speak, like by their like super humble guys, but like super efficient and like highly skilled. And ever since I was a kid or like a teenager, and then enrolled in the army, and then student, and like along my entire journey. I've always had like one or two people I could like look up to as a role model, and I'm grateful for all of them. And I mean, I can give names, but yeah, like there's Guylaine, there's Didier, but like no one in your audience would know them. But yeah, like those people basically.
That's great though. That's great. Well, let's wrap it with that, man. It's been great to catch up with you because we haven't talked in quite some time. True, yeah. It's good to see what you're working on and what you're doing. And I know that was a ton of information for anyone listening. It's like crypto, blockchain, just kind of like from drinking from a faucet sort of deal. But it's a fascinating field. And if you haven't learned anything or read anything about it, I would encourage you to go jump in. I'm going to link to Anthony's information in the show notes as well. So if you want to talk to him directly, I'm sure you can reach out to him and learn a little bit more. Again, thanks for jumping on. It's great catching up with you.
Yeah, it's been my pleasure. Honestly, it was absolutely awesome, and thank you for having me. And I hope your audience got some value out of it, and will tip their toes in the cryptocurrency world.
That's right. You know that 80% of the agents we speak with got into real estate in order to gain passive income, so they could obtain financial freedom and become work optional. If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.